The S&P 500 keeps hitting brand new all-time highs, but underneath the surface, most stocks are still getting crushed. And that disconnect might be creating some of the biggest opportunities in the market right now. So today, we're breaking down 5 stocks that still look surprisingly undervalued after earnings, including businesses growing fast while Wall Street keeps heavily selling them off. Today's video is sponsored by Moomoo, a global investing platform with over 29 million users and one major advantage for Canadian investors buying US stocks. Most brokerages quietly charge massive currency conversion fees when buying US stocks, but Moomoo removes those markups completely while also offering powerful AI earnings tools. The first company on this list is Skyward Insurance, a stock quietly growing earnings at double-digit rates while the entire insurance sector keeps getting sold off. Skyward focuses on specialized insurance markets with very little competition, and in several of those niches, they're already the market leader. Even while the insurance industry faces serious pressure right now, Skyward's earnings and book value are still hitting brand new record highs. Since becoming a public company, Skyward has compounded earnings at an incredible pace, and management believes growth is still accelerating into 2026. Skyward CEO says the company has never missed analyst expectations since going public, and he believes future guidance could still be beaten again. Despite all-time high fundamentals, Skyward now trades at a surprisingly cheap valuation, and the market still seems to be ignoring the company completely. The second stock is Shift4 Payments, a company processing billions in transactions globally while its stock price continues collapsing lower. One concern with Shift4 is competition, especially from Toast, which has already started taking restaurant customers away inside the US market. But even with those concerns, Shift4 just reported another quarter of powerful growth across revenue, profits, cash flow, and payment volume. Based on management's outlook, Shift4 is trading at an incredibly low free cash flow valuation for a business still growing at double-digit rates. The founder already owns a massive stake in Shift4, and he's still buying millions of dollars worth of shares directly from the open market. The third company is Brookfield Asset Management, a global giant quietly controlling some of the world's most important infrastructure and energy assets. As artificial intelligence expands globally, energy demand is exploding, and Brookfield sits directly in the center of that massive trend. From data centers to nuclear energy and transmission networks, Brookfield already owns many of the exact assets AI desperately needs. Even with massive long-term tailwinds behind the business, Brookfield still trades below its historical valuation averages right now. The fourth company is MercadoLibre, the dominant e-commerce and fintech platform rapidly taking over Latin America. MercadoLibre already controls some of the biggest e-commerce markets across Brazil, Mexico, Argentina, and multiple other regions. MercadoLibre's advertising business is now exploding, growing dramatically faster than the entire Latin American digital ads market. At the same time, millions of new users keep joining MercadoLibre's fintech ecosystem every single quarter across Latin America. Even though profits temporarily slowed from aggressive reinvestment, MercadoLibre's long-term growth engine still looks unbelievably powerful. The fifth and final company is Meta, a business still dominating digital advertising while Wall Street worries about AI spending. Meta just added more advertising revenue in one quarter than almost every major competitor in the entire industry. The market panicked after Meta increased AI spending again, but revenue growth keeps accelerating at the exact same time. Despite accelerating growth, Meta now trades below many of its historical valuation averages, something investors rarely get to see. While most investors chase the same crowded AI stocks, these 5 companies may quietly become some of the market's biggest long-term winners. The S&P 500 keeps pushing higher, but most of the gains are now coming from only a handful of massive companies. This dangerous concentration means the rally is more fragile than it appears. Meanwhile, many strong businesses are still trading far below their highs, even after posting solid earnings and growth. Skyward Specialty Insurance quietly continues delivering record earnings growth, while much of the insurance sector struggles badly. Shift 4 continues generating massive cash flow while aggressively buying back shares at what management believes are bargain prices. Brookfield may become one of the biggest hidden winners of the AI boom because artificial intelligence cannot scale without energy. MercadoLibre is not just e-commerce anymore. It's building a full-scale logistics and delivery empire across Latin America. Beyond commerce, its credit and fintech division is rapidly expanding, reaching millions of users across the region. Meta is quietly becoming one of the most powerful AI companies in the world while still dominating global advertising. The real opportunity might not be in what everyone is buying, but in what everyone is currently ignoring. And while markets stay unpredictable in the short term, long-term investors focus on one thing only: quality businesses compounding over time. After months of narrow leadership, we may finally be seeing early signs of market breadth starting to improve again. While retail investors chase headlines, institutions are quietly accumulating high-quality companies at discounted valuations. The biggest winners of this cycle are not random. They are companies where AI is accelerating real earnings growth. In the end, wealth is not built by timing markets, but by holding exceptional companies long enough to let compounding do its work. And that's the real story. Not hype, not noise, but 5 businesses shaping the next decade of global investing. The Federal Reserve's rate cycle is stabilizing, but its effects continue reshaping valuations. At the same time, AI infrastructure investment is accelerating aggressively, driving massive capital flows into chips and data centers. While the S&P keeps climbing, many sectors still trade below historical valuations. Institutional money continues dominating market momentum, while dividend and value stocks remain largely ignored by retail investors. Global energy demand continues rising as AI infrastructure expands rapidly. Even with slower economic growth, long-term demand for power, data centers, and industrial assets remains extremely strong. Despite short-term volatility across markets, long-term investors are rewarded through discipline and diversification. Over time, compounding returns and consistent strategy remain the most powerful forces in wealth creation.